Christmas is less than a week away, so we got to wear those Christmas sweaters while we do some technical analysis for the SPY, Qs, Apple, Tesla, Amazon, and Nvidia. And we're just going to get right into it today, starting off with the SPY. Yesterday in the SPY, we were talking about how we're getting all these kinds of gaps. And guess what? We have another one, but this one looks a little bit more green, a little bit more bullish here. Even though we are at the top of that Bollinger right now, this could be some direction that we're at least going to go test that weekly expected move and maybe even come up and test that all-time high. Something to note on the daily, as we are, more than halfway through the month of December, we are outside of that monthly expected move. So this yellow line here, price will want to get back within this 68% of the time. So unless we're seeing something drastic happen, we're still squeezing at this point. It looks like we got a little bit of a downturn, and then we still continue to squeeze with not a lot of reversal signals, not a lot of negative trends. But at this point, you just have to say we're approaching the end of the month, which means that 68% of the time we do come back into this yellow area here. We were talking about how we were basing out down in these levels, right? We were talking about the divergence down here and how we were most likely going to see a run. Now, we've seen a huge run, and we've seemed to have just squeezed and squeezed and squeezed for months now. So we really need to pay attention to the overall weekly chart. As price is going higher, I'm sure this market is frustrating for a lot of people, but as we do trickle higher, it's good to look at that bigger picture again and just remind yourself, hey, even though we are going higher, if this confirms, this big signal confirms, which actually happened back here at the all-time high, a divergence on the weekly that is on the RSI and on the MACD at the same time, we can see a big downturn. So it kind of asks the question in your mind now, what is going to be that thing that is going to bring down this market? And the bond market's kind of telling us, hey, we need to lower these rates pretty dang quick. So we have to be aware of this signal at this point. So if this does curl over, we do have that chance to come all the way back down to the bottom of our wedge that we're in at this point. But right now you're breaking out of it. Is this some kind of short fake out? And do we actually close down by the end of the week? That's the big question. But considering GDP has been pretty good, and we're going to get a high reading on that, we're actually up towards 5% on the reading for this month. Is that initially going to be seen as good news? But then people are going to say, oh, the economy's still growing, and the Fed was mentioning those, possible rate cuts not even coming in. They were still leaving those rate raises on the table. So is that going to be a reason for us to sell off this week? And we really just have to pay attention. The hourly on the SPY, we're noticing we're coming up towards that weekly expected move. So I am expecting, some kind of resistance up here. And if we don't get it right there, then it's probably going to be up here at this all-time high. So we might see some selling come in at that point. If we do go to that all-time high, you're most likely going to see this curl up and create that nice divergence, which will be pretty close to that negative territory. But at this point, we still have to be bullish. Why? Because we are in the positive territory. So anytime this thing turns up, we are going to test the next high. And since we have crossed that high at this point, if that does want to curl up, we can see more strength in this move. The Qs, I'm going to start off on the weekly because we were mentioning the top side of this weekly range being right at where this wedge, this trend line actually comes into play. So we really need to pay attention to it at that point because we do have a weekly divergence. So it's good to, during a squeeze to look at the overall big picture and position ourselves for a couple months out. Now we want to pay attention to this because if this does roll over and we get that to confirm, right? If this actually does roll over and confirm, we can see this wedge broken down, which just tells you that something very bad could be happening in the early parts of 2024. Now, if we do want to, cross down and then curl back up, into some point later on in the year, and then we see that fall, we'll have to pay attention to that. But at this point, you just know the bond market's kind of telling you something bad is coming in the next 6 months. But at this point, right, on the shorter time frames, just like the SPY, we have to be a little bit bullish, even though we are squeezing and squeezing and squeezing. It doesn't mean buy into this move. It just means there can be more bullishness because we're in that positive territory. So if we do curl up, like this, and we do get this to actually cross, we could set up some kind of divergence, but we really want to be patient here and wait for it to start the negative trend by getting into negative territory. And what could happen from that, we talked about this last episode, is you could come up into this area, right? But we could come down, create some kind of handle in this area right here. And that actually could be, the next downfall. So we really want to pay attention to this, but it's kind of hard to see what is going to bring the market down as everything is seen as good news. Apple hasn't been participating in that move, right? We saw it come down to lower levels, but we just at the end of the day, we broke through this little mini trend here. So we want to pay attention to it. It looked like on the probably really 15 minute, we were starting that negative trend, but you couldn't get that done on the hourly. You're still right at that positive territory. If this does curl up, it can go up like this, because we then would be testing this high or creating a new one. So what we want to pay attention to here is the fact that we're going to get outside of this monthly expected move, which means that Apple might want to come down next week to get back into this zone. 68% of the time that does play out. Other than that, really what I'm paying attention to on Apple is just this trend line, right? We can mark up this trend line and see how we're struggling to close below it even on an hourly. So I think if we do get a daily close below this trend line, you do have a good probability to come down into this area right around probably 188, something like that. So back into this zone that's had a lot of sell-offs. Maybe we actually do get some support in this area and then set up some kind of lower high in the future. But right now we are in a bullish time and Apple looks like it's curling up at the end of the day. You're closing above all your moving averages. The only thing that hasn't happened, which is because it's a lagging indicator, is this MACD hasn't crossed on the hourly. So if that MACD is able to cross tomorrow, you're most likely going to come test this high or make a new one. Now, Amazon's a little bit of a different story because it already hit its weekly expected move, and now we're seeing this kind of tapering off, right? This isn't some kind of dramatic selling or anything like that. It's just a little bit of selling coming in at that weekly expected move. This is all that's priced in from the options market, that 154.88. So we expected some resistance to come in at that point. So we got there really fast on Monday, like right up towards it on Monday. We're touching it as of today as well. And then we see that selling come in. So that's how these can be very useful. Good profit taking tool. I like to say that. On Amazon, we're still bullish on this until we get into that negative territory on the hourly. Start that negative trend, right? Sorry about that, I burped. But yeah, we wanted to pay attention to this just because we're not in that negative territory yet, but we've seen what happens when we do get into negative territory. If we just look at this MACD and we point out the one time we were able to get a couple dips into negative territory, we get a low and we get a lower low. So if we're able to, roll down and then get towards that negative territory, or even just roll up and then create some kind of divergence that gets us a little closer to that negative territory, that's going to be a good sign. We really want to pay attention to Amazon, whether or not it's able to hold up in this area. If it does fade by the end of the week, it might be a good signal that there's going to be some selling next week on light volume. Tesla, last week we were talking about how it went to its weekly expected move and exploded from there. So it was a very good trade. And now you got that divergence. So 30-minute divergence is a good time to take a little bit off the table. And we have gotten this next bounce. But what this might be doing is setting up some kind of, double top up here. So we really want to pay attention to this because you do still have divergences up here. You have them both on the MACD and RSI at the same time, but we are in positive territory. So if this wanted to break down, this is probably how it would do it, right? It would set up this left side head and then a right shoulder to come grab this liquidity up here and then start to break down. But as of right now, you are in positive territory. So if this thing wants to remain bullish and come test this trend line up here, that can happen tomorrow. If this move were to happen tomorrow, you would be getting really close to that weekly expected move. I didn't put it up on this chart, but you would be getting very close to that, and that might be the end of that move. So we want to pay attention to this. We've seen a lot of rejection from that trend line up here, so we just need to pay attention to the bullish and bearish side in the near term. Last night I was talking about how, this is bullish. This is bullish to cross up. It's bullish to come to this high. It means you might go make another one, right? It's bullish in this area. We kind of got out of that flagging that was happening, right? And we're still closing above that flag, I think, as of right now. So we want to pay attention to the bull side. But we're saying, there's a lot of bearish signals out there, which means that this might not be the best time to take a trade. It might be a time to be a little bit patient, and the next day we do drop off. So the fact that the market is overall trickling higher and you're not seeing Nvidia be the one to participate, remember Nvidia did lead this market. So you'd really want to see tomorrow Nvidia start participating in that move and not start to head to lower levels, because if it heads to lower levels, it's starting to open the door to what we were talking about, how this thing would reverse from here. So the way that this would reverse from here is if we're able to actually break down and come into this trend line, right, and then bounce up, we would actually be grabbing that liquidity right in here, and we could see this left head in a right shoulder form, and maybe we break down after Christmas. We're going to talk about yields, the dollar, and TLT next. And what we were talking about on yields here was we do have the potential to reverse from this area, and maybe GDP is actually seen as too much growth and we'll actually see this thing bounce. But we talked about two scenarios. Either this thing's going to bottom out and bounce pretty quick this week, or it might go sideways test the lower trend line, and then we might see that reaction. So it pays to be a little bit patient in this market. If you are trying to go to the short side, it's very difficult to do when you're in a short squeeze. So power to you, but I would really wait for some negative trends to begin before you start shorting. So we want to pay attention to this with the GDP, which comes out in a couple days. The dollar is what we'll pay attention to as well, because we notice this divergence. Okay, you have divergence on the MACD, you have divergence on the RSI at the same time right around a trend line. So if we do see some more bullishness, we could come test this trend line kind of like the yields might, and then we could see that explode. But really, we're just paying attention if this is actually able to roll up. If this starts to get below these levels and then get some kind of retest and go even further down, we can actually see a melt up, like a huge, we've already been in a melt up, first of all, and now we could be in an even bigger one, which is a very, very bad signal for 2024. We say it every episode, but the VIX got even tighter today. So you're looking for a big move in the VIX. And the last time they were this tight, you really only got this big move up to 16. So I noticed that I went back and looked at when the Bollinger Bands got this tight together on the VIX. And most of the time we ended up at this level of about 1683. So that's why I haven't marked at this point, because we could just see some kind of hip fire selling, and then we actually see that dissipate in January, and we see another bull run. So we want to pay attention to the VIX just because these Bollinger Bands are even tighter today, and it was able to close above the 9-day moving average one more time. The high yield growth is actually consolidating sideways and not really confirming another move up, while the SPY is kind of trailing upward at this point. So we want to pay attention to this. Now, we have noticed that they really are just waiting for some data. So you could just see this remain sideways until we get at that GDP report. So we're going to be paying attention to this. Right now, you do have that difference, but if it does come above this high, that would be invalidated. But you do have a slight difference between the SPY and HYG as of today. I keep finding other things that I want to talk about. And what I wanted to talk about as well was the IWM. The IWM coming up into this zone up here, not necessarily marking it as some kind of, with these lines necessarily. I'm really marking it as zones, because we notice when we get down here, we see rips. When we get up here, we see pull downs, like big pull downs, big crashes. When we see here, we see rips. We get that second leg in the rip, right? And then we don't actually get down there. We just, from this level, we do see big buying. And from this level, we do see big selling. And you're getting awfully close to the top of that. So as of tomorrow, you actually could hit the top of that. And I'm thinking about adding IWM to my videos and giving you guys risk ranges for IWM every single week. The main takeaway from this video is, do you like this shirt? It's freaking dope. Love it. Anyway, the actual main takeaway from this video is, yes, we are seeing more bullishness. Yes, we are seeing more squeezing. And it's going to be the people who are the most patient and able to wait for those negative trends who are most likely going to win in this downturn. Now, I do believe we're going to see a downturn because I am seeing those weekly signals. And if we are able to see some selling for a few weeks in 2024, we're going to see some dramatic selling. So it's a point in time to be a little bit cautious. Thank you guys for watching to the end of the video. I really appreciate it. You guys are liking, you're subscribing, you're doing all the stuff. If you want those weekly ranges for the individual stocks, those are actually going to be down in the description below if you want to donate, anything like that. But for right now, I just wish you all the luck in the world trading this week. I know it's a tough one to trade in right now, but I still wish you all the luck in the world, and I hope you have a good night. Peace.